Oh wait, my bishop's gonna be hanging here. Oops. Should have probably. If he takes, I have to move my bishop. Oh. Oh my goodness. Oh my goodness. Don't want to get. Is he gonna trade this? Okay. Oh. He hung that. That's fine. Gotta go. Oh no. That'll leave me down. Jeez, man. Jeez Louise, man. Oh wait. Oh my gosh. Dude, that sucks. That sucks. No, bro, I cannot. Well, thank you guys so much for tuning into today's live stream. Hopefully you guys are in, you guys have a good day so far. I'm warming up today with just, just some quick games of chess. Nothing too crazy here. Yeah. All right. Not entirely too sure. If this is what he wanted here. Oh no, this is hanging now. Here. Bruh. I just have to give up. I just have to give up. Oh my goodness. Is it lost, boys? It's lost. Okay, it's lost. It's lost. It's lost. But yeah, hopefully you guys have a pretty good morning so far. Today is April 9th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. So we don't necessarily have any, red phone news. We do have FOMC meeting, but this isn't like regular FOMC where the statements being released, interest rates are, nothing like that. But it is happening at 1 p.m. so that could bring in volatility in the afternoon session. But overall, nothing really much to worry about here during the AM session. So coming into Thursday, we have core CPI, and month to month and year to year here, and real I think this is pretty important here as well, employment claims. So that's tomorrow, and we have some core PPI and PPI on Friday with preliminary consumer sentiment and preliminary inflation expectations. But yeah, going into the actual technicals here for today, we have created, so this was the daily candle that we created here on Wednesday. So this daily candle here, the way that we created this daily candle, it's easy to assume that we're most likely going to take out the daily low, right? The daily low is right there, and that would be the draw of liquidity, right? It's pretty easy to assume so. And yeah, I mean, this would be nice for us to take out the daily, this would be my daily objective coming into today, would be that daily low, just because of the way that we created here, that daily candle. And yeah, I mean, as you guys may saw, we did end up taking out the previous day low whenever we opened up at 6 p.m. Eastern time yesterday. And so because we completed the daily objective already, I'm not going to really force an objective here coming into, I can't use the daily time frame anymore for an objective on the daily time frame. I'm going to have to go use the intraday time frames, right? Such as the 4 hour, the 6 hour, the 8 hour, or the 10 hour. Depending on how we close on those time frames, will give me a intraday bias. But yeah, I mean, we completed the weekly objective here as well. So this was the previous weekly candle. The draw of liquidity was the weekly low, which we did end up taking out. And yeah, I mean, it's been a pretty bearish, I would say, month so far, with the whole tariff situation being released and whatnot. Yeah, just everything here is just about the tariffs, right? We have but yeah, like I said, coming into the morning session here, depending on how we close here on this 4 hour time frame and this 8 hour time frame, will give me my morning objective, right? With the way that we're closing on the 4 hour and the 8 hour, or it appears to be how we close, the easiest assumption to make is that we're going to take out the 4 hour high and the 8 hour high. So that would be the draw of liquidity for me if we were to close right now. But we still have 20 minutes or so until the closure, so I'm not going to really force anything. Let's take a look at ES and see where we're at. Pretty nice, but yeah, depending on how we close there on the 4 hour time frame and the 8 hour time frame, will provide me with a intraday bias. Notice how I'm applying the same concepts to the 4 hour time frame and the 8 hour time frame, just as I did with the daily time frame, right? Every single candle has an open, high, low, close. It has an objective, right? It's like a clockwork. It's like a set of gears. Like, it's like this, right? Every single time frame is working alongside one another, just rotating and rotating. Same thing, same concept here, right? Daily time frame, 4 hour time frame, 1 hour time frame. Everything's working together. And yeah, I can apply the same concepts here, just as I did with the daily time frame. So depending on how we close, it's very simple. If it's a bullish closure with this 4-hour candle, the next candle I can anticipate a open, low, high, and close. So something like this, right? I can anticipate something like that. Who knows? But yeah, that's basically all I have for the technicals wise. I'll get more into depth once we close. But as of right now, I mean, there are some things I do want to watch out for. So like, one key thing is, could we retrace back into the discount of this dealing range, which could be a possibility coming into this morning, right? So from this swing high at previous day high, right? So from that swing high to this swing low, does prices have the willingness to trade into the premium where prices are going to be considered higher or at a premium? Can prices have that? Do they have that urgency to drive up into the premium? And it appears that we just did that. So there, we just retraced back into premium of the dealing range. So we retraced back into the premium of the dealing range just now. Let's see, what about here? Not yet. I mean, there's that dealing range, which could be traded back into. So we'll give it some time. But yeah, I mean, we'll just have to wait until we close on the 4-hour candle to really, confirm the idea that we could retrace into this dealing range premium level. Being very, very nimble here. I don't want to really do too much that's, too forceful. I'm just, like I said, the daily time frame's objective has already been completed. Same thing here with the weekly time frame. And yeah, I mean, if I can zoom in and look for an intraday model, I would. But as of right now, I'm just going to wait until we close. One thing that I do want to draw your attention to here as well is that we actually have, so this left side chart here is my ES, and notice how there's an SMT at this swing high here between ES and NQ. So there's actually a SMT here where ES, we took out this swing high, and NQ we did not. That's a SMT divergence, right? And I've been stating it throughout this week and previous week, where if there is SMT, there is a possible chance of a reversal, right? That could be a possible indicator of a possible swing high or a possible swing low. And so here, like I said, I noticed that there's a SMT here, and this could end up being a strong swing high. But we'll see. Yes, it's a little bit clearer that, but yeah, we traded into this inefficiency here on the daily time frame. We traded up into it, and then we created a bearish daily candle. And with the way that we close here on this bearish daily candle, apply the same concepts as I've been telling you guys: open, hello, close. What can you anticipate for the next daily candle to do? Take out the daily low. That's the bare minimum that you can anticipate, which we did end up taking. And what do we do after we complete a candle's objective? Don't use that time frame anymore. Wait until we close on another daily candle to use it again. But like today, like coming into this morning, I'm not gonna force a daily objective on ES once it's been completed, right? So yeah, just some words of wisdom there. You're still being patient, waiting for that 4-hour candle to close. During the meantime, let's take a look at some economic news that might be, insightful to take a look at. I want to take a look at this. So we have dip buyers braving the market during the stocks carnage. I like how they have this in the background. Dow Jones minus 600 points, minus negative 1.57%. The key points in this article is the stocks initially rose Tuesday in hopes to limit economic Tuesday, what do? We kind of like a consolidative day, but we did end up trading into that inefficiency here on ES, and on NQ we had the SMT, and we started to have like a little bit of a sell-off kind of. And then China, what did China do? It also interrogated, or it also like responded back with its own tariffs, right? After the reciprocal tariffs of Trump. So more tariffs, no good. Individual investors are buying the dip, pouring billions to ETFs and equity funds despite warnings. Investors who stepped in to buy the dip on Tuesday suffered a historic reversal when stocks gave up big opening gains and dove into the red during the afternoon. Hopes that negotiation can limit the economic damage from President Trump's trade war initially sent major indices soaring Tuesday, driving the Dow Jones Industrial Average up around 1,400 points in early trading. Stocks skidded in the afternoon with the blue chip index falling about 320 points and the Nasdaq Composite sliding from a 4.6% gain to a 2% decline in its biggest blow gain in more than 40 years. It's been very, very volatile, right? The amount of points that we have been moving is like insane to me. Like, let's take a look at the actual like all-time NQ charts. We like, this is 01. Like, we move on average in a year in 2002 900 points. Already we moved 6,000 points on NQ. Like, the volatility in the markets now is like insane. And like in one day too, let's see here. One day I'm sure we made a lot of movement. Yeah, like in one day we moved more than a year. It's like actually insane. So it's been really volatile. The reversal after stocks had been buoyed by the Treasury Secretary Scott Benson's remarks that trade deals could emerge, and it hopes the day would bring some relief to battered investors. It also challenged the playbook that helped stocks recover quickly from other recent routes, including the COVID crash and the collapse of the Silicon Valley Bank. When stocks go down, it is time to buy. Adherent range from ordinary investors to Bitcoin speculators, defying Wall Street's warnings that the hit to growth and corporate earnings could weigh on markets for some time. Some cite Warren Buffett's advice about being greedy when others are fearful, and say the calculation is simple. Given enough time, markets usually go up. what's the trend here? Let's take a look at the 12-month. What's the trend? I mean, we've just been just you know, steadily going up and up and up and up. Right? Brooke Barrios, a 24-year-old graduate student studying architect and real estate development in New Orleans, started trading during the started trading during the COVID pandemic. Barrios says he has been waiting for an opportunity to buy stocks at discounted prices and has also added to his positions in some hard-hit tech stocks, including AMD, Alphabet, Meta, since Trump's Rose Garden ceremony Wednesday announcing the broad tariffs. He plans to continue buying, says he wouldn't mind if the markets fall more. I'm kind of seeing this as going into my favorite store and getting a huge discount. Barrios said it's just a great opportunity for individual investors like Barrios have poured about $50 billion a month on net into the United States Stock Exchange ETFs. So ETFs during the past 2 months, JP Morgan and analysts estimate about $30 billion a month into equity funds, including mutual funds and index funds. The main difference is that mutual funds are actively managed, index funds are passively managed. Ordinary investors have been steady buyers, even as some institutions ditch stocks and warn that after some downturns, like the dot-com crash, markets can take years to recover. And that's fine. I mean, you have to take a look at the long term here. On Tuesday, investors were also looking for buying opportunities outside the Japan's Nike stock average gained about 6%, notching its best day since August. That came as traders continue to bet on further turmoil. The SIBO Volatility Index, the VIX, known as Wall Street's fear gauge because it measures traders' expectations for stock swings on Tuesday, closed at its highest level since the COVID crash. The market's not cheap by any means, said Sam, general manager of brokerage and crypto at Public. Runs uncertain times. The risk is still out there. Who's favored? I mean, these tech stocks are like really solid, to be honest, right? Amazon, I really enjoy. Like, I like Amazon. I like the whole idea of Amazon. Alphabet, Google, good, awesome source as well. You can't go wrong with that. Well, okay, I don't know. Nvidia, Nvidia is having, I think there's going to be more competition in the whole like GPU and chips, but I don't know too much about it, so I can't really say anything. And Tesla is just, Tesla is always associated with Elon Musk, right? And I feel like one of the reasons why Tesla is falling at this rate here is because of Elon's involvement with his involvement with the Doge inefficiency thinking, whatever, and how his attention is geared towards that, not really into developing new technology for Tesla. But yeah, for whatnot, very, very, I think this is still like a really awesome company. Uncertainty and the markets do not, like, that word uncertainty does not pair well with the markets. It's just something that, like, it does not like. Markets do not like uncertain times. Buy this dip slowly. I like that idea. I really do want to get into Tesla whenever it gets into like this whole price range 180 to like 29. I don't think it's gonna hit 29, but like from this range here, I do want to see. I would like to buy more Tesla whenever it gets about to like the 180-ish area. I think that's a solid place to buy. CRV is CoreWeave. It's kind of like NVIDIA almost in some sense, but it uses NVIDIA chips to create like supercomputers for for like companies that might need those supercomputers. Like I can't really name any, but this is like kind of this is like their business model almost, where they just create supercomputers and they lend it out for companies to use. Let's see. They were talking about how the bond prices are or bond yields are going up. Yeah. Bond yields, yeah. You could say it's been rising. 5. If the yields are increasing, right? If yields are gaining speed, that means that just kind of gives off the idea that interest rates are going to be raising, right? And the bond prices are going down in value. That could indicate that interest rates are rising or something like that, but who knows? This is what the bonds are telling us here on the 30-year. Let's look at the 20-year note. Bills notes. So this is the notes. It's been rising here, actually. Let's take a look at the 10-year bill, Treasury bill. Pretty bullish. Here's and SPY. QQ. Yeah, we've been selling off here on the for that as well. But let's take a look at the charts. About to close here in about. Oh, let me actually. I'm gonna get ready and just have my account logged in, just so that I could be prepared. I'm prepared for a possible trade. Give me 1 second. Alright, I am on. You're online, boys. There's that 10 o'clock open, and with the way that we are closing here, right, like I stated here on like 10 minutes ago, with the way that we close here on this 4-hour candle and this 8-hour candle, easiest assumption, right, the easiest assumption for me to make is that we're most likely going to take out the hourly, the 4-hour high and the 8-hour high. That's going to be my draw of liquidity coming into this morning. And once we do take out the 4-hour high, which we just did, we should expand higher towards that equilibrium of the dealing range, that premium level, which is something that I would be looking out for, right, coming into this morning, is the 4-hour high, which we just end up taking, and retracing back into the premium of this dealing range. Let's see if there was an entry pattern for us to really use there. Right, so right at I don't know. The way we closed, yeah, we didn't really have an entry pattern, but yeah, like I said, it's fairly easy to kind of come up with the bias. It's just the hard part is actually sticking to your plan and being disciplined and understanding that if there's not an entry pattern for you to have, then you don't force anything. Yeah. Morning objective has been completed. One thing that I am looking out for is that with the way that we closed here on the 4-hour time frame, because it's a bullish closure, how high I can anticipate is up into this premium level. I really do want to see prices trade up into this premium level of the dealing range and possibly have a reversal back. Who knows? But I like the idea that we should expand after taking out the 4-hour high and expand towards the premium of this dealing range. And so, with that, I'm gonna go back and head into. I'm gonna go into this journal here with you guys and go over some things that I do want to mention. Jeez, look at my this is how I used to trade back then. All these notes. Jeez. Had a model, no entry pattern, or didn't have a higher time frame objective. Alright, so coming into this week, some things that I should continue to do, or something that some of the pros from last week is that taking consistent trades, right? I was taking consistent trades. And what I mean by consistent is that every single trade that I took, it was systematically the same. I mean, not everything, like the numbers weren't the same or everything, but the whole, like, the framework, everything was similar. I had a higher time frame objective, I had a model, and I had a entry pattern. A higher time frame objective, there are two higher time frame objectives that I am going to use. It's expanding towards existing liquidity or retracing back into the premium or discount. That to me is the two reasons why prices, or one of the two reasons why prices moves. If you guys do want to note this, the four main reasons why prices moves is to take liquidity, is to generate liquidity, is to fill inefficiencies, and to retrace back into equilibrium, whether that is premium or discount. And I base my higher time frame objectives on two of those reasons: expanding towards liquidity and retracing back into the discount or premium. A model is how I'm aligning myself with that specific objective, right? If the higher time frame objective is suggesting bullish prices, then my lower time frame model should also suggest lower, or not lower, but higher prices. Entry pattern, always going to be a fair value gap. It should be a fair value gap that supports the idea of the direction in of the model's direction in the higher time frame objective direction, right? So if the higher time frame objective and the model's direction bias is higher prices, then my entry pattern should be a busy. Essentially, a busy is a bullish fair value gap. Second, understanding SFT, utilizing SFT. Like I stated with you guys, the fact that we had SMT here between NQ and ES at the highs here yesterday, because there's a presence of SMT, what is that equal a possible reversal, right? It doesn't suggest a continuation, but because there's SMT, it suggests a reversal. And if there's a lack of SMT, then possibly we could have a continuation. So utilizing SMT and understanding how SMT works is crucial. Second, time frame, understanding time frame alignment, and how time frames are fractal. Like I showed you guys here, an example. No, not even an example, just the breakdowns, right? Broke down the daily objective with the same concept. Same thing here on the 4-hour time frame as well. Breaking down the 4-hour time frame with the same framework, same strategy, right? Open, high, low, close. How did we close? Yeah, so fractality is just one of the components that makes this markets like very unique, right? The fractal nature of the markets. And fourth, just being patient. Like coming into this morning, I showed you guys that level of patience, right? Where sometimes your objective could be present. You might have a model, but you don't have an entry pattern. What do? You sit on your hands and you don't force anything. There's nothing for you to take if one of your components is not there in a trade. And some of the cons here, some things I can work on, is just learning to really accept, like really learn how to accept the outcome of your trade, right? It's something that you can't control. You can't decide if the market's going to go up or down. I mean, there's some ways that you can make it a little bit easier to tell, like with the whole fundamentals, right? Like fundamentally wise, with the whole tier of situations, it's bearish with and possible like rumors about recessions and stuff like that. It's not bullish news. It's pretty bearish. There's a lot of uncertain policies that's being just thrown there, and markets don't like that. That's fundamentally bearish. Technically, technicals wise, we're also pretty bearish, right? During the time of the tariffs, right, we had this weekly candle where we traded into a weekly fair value gap. And what did we do right after creating that bearish weekly fair value gap? I stated here, and this was I think 2 weeks ago, where reasons for a macro sell-off. So like reasons why we should have that continuation lower. Like I said, when we trade into this weekly fair value gap and we respect it, we show respect to this weekly fair value gap, prices always tends to have a really like urgent move lower. It's always like that, even in bullish conditions. Whenever we like retrace back into a fair value gap and we respect it, it always comes with like an expansion higher, right? Like here we retraced back into a inefficiency, we respected it, and then we ended up moving 1,200 points higher. It's just something that's very common in here. Retrace back into that weekly fair value gap, bam, like really large movements down. And here it was actually about a 4,000 move lower. Yeah, I don't know how I got to that, but just understand that the outcome of your trade is something that is not in your control. And just pay close attention to detail in everything. I think that's the only way that you can really practice this skill, is just apply it everywhere. And some improvements here, some key improvements, or like I said, taking consistent trades. How am I going to do that? Require a higher time frame objective, a model, and an entry pattern. I like to journal my trades and make sure that whenever I'm journaling, I'm able to identify the 3 components of a trade, and that just keeps me consistent, right? Second, being patient. Don't force anything except the fact that you're not going to be in every single move. Like this 4,000 point move lower, not part of it, simply an observer. You know, you're able to anticipate it, but if you don't have a model that allows you to be a part of it, then don't force it. A model's like there so that it can keep you from taking any unnecessary losses, and it keeps you to like in accordance with your risk and reward like factor. And just focus, right? Focus on things that really benefit you. Don't focus your energy on things that like are meaningless, or not meaningless, but I guess not beneficiary towards you. And I think that's going to be all for today's live stream. I've gone over pretty much everything that I wanted to go over here with you guys. Yeah, I reviewed the SMT, trade checklist. Yeah, that's going to be all. And here, I'll leave you guys with this. So, notice how we've already completed the 4-hour objective, right? So, for the next 4 hours, don't use the 4-hour time frame. But notice how we're about to close here on the 6-hour candle. And in about 2 hours or so, we close on this 6-hour candle. Depending on how we close here on this 6-hour candle, you will have a new bias, a new objective during the morning session, or I guess going into the afternoon session. So be patient, wait until we close here on the 6-hour candle. I don't know how we're going to close. I don't have future sight, but once we do close, we will have a new objective. And if the way that we closed on the 6-hour candle is unclear, then sit on your hands. There's no reason for you really to force anything. You can also go into like the 15-minute time frame, 30-minute time frame for like even zoomed in models. But as you're learning, I don't think you should really force that idea. Yeah, that's going to be all. Thank you guys so much for watching, and until next time, peace out.